Hello and thank you for watching Dukascopy TV. I'm Monica Gibson. David Marek is joining me down the line from Prague for an economic update on the Czech Republic. David, even as the emerging European countries were reported as shining in Q1, the Czech economy was seen to be stagnating, according to official statistics. What were the factors behind this, do you think? Does it stem from headwinds from the Ukrainian crisis, or is this signs of a cyclical slowdown?
The Czech Republic faces quite favorable forces, especially because of growing foreign demand, and as a small open economy, Czech exports are growing significantly in the recent months. So year-on-year GDP increased by 2%, while quarterly growth was zero, but it was because of very, very strong last quarter of the last year, and it was caused by one-off factor of increasing tobacco taxes. So it has helped to increase GDP recently, while taking some toll on the latest figures.
The CNB seem keen to maintain their monetary policy and have actually given some indications that their cap on the crown may surpass their initial timeframe. The intervention received some criticism in the early stages, but how would you sum up sentiment towards it at present?
I would say that the discussion about FX interventions done by the Czech National Bank is much calmer now, and I would say that it's agreed that it has helped to revive the Czech economy. As I said, we are a small open economy relying on exports, and so higher competitiveness through a weaker currency is a very important contribution to the GDP growth, and we can see first positive impact already, and I would expect this factor to be even stronger in the second and the third quarter of this year.
Inflation, or lack thereof, may not be considered the most pressing economic hurdle for the Czech Republic by economists, but is something which is attracting a great deal of attention from the CNB. Rate setters have declined to name specific numerical indicators that would trigger the next policy move, but what are your expectations?
For me, I would say the most important is to look at inflation and inflation forecast. If the Czech National Bank see inflation to go above 2% target, and although inflation expectations and wage growth is heading the same way, then it would be the first signal that the Czech National Bank is prepared to change its attitude and start to wind down in its special policy, fixing the corona exchange rate. And now it looks that the right moment could be in the third half of the next year.
Taking into account the disparities across the bloc, the ECB seems set to make their next move. Could this potentially knock the CNB off their policy path? Are you expecting any movement from the single currency versus the Czech crown?
For now, the outlook for the Czech currency for coming months is very easy. The Czech National Bank is keeping the exchange rate above 27 vis-à-vis euro, and as I already mentioned, in the next 12 months, the Czech National Bank will keep the same policy. So I would expect maybe mild appreciation after the end of FX fixing. During 2015, the Czech currency can gain 1, maybe 2%, not more.
David, thank you so much for your time and insights today. Well, that's all from David and myself. For more currency outlooks, please do click back for today's forecast, looking at the dollar yen with Natalie MacDonald. For now, though, it's goodbye.